Okay, this video is taking a adjusted trial balance and then creating a classified balance sheet. So here they give us the adjusted trial balance column. So they've already made the adjusting entries and placed it into the trial balance. So then now we'll come in again. You have to a lot of the accounts will be in order, but then you have to remember like these adjusting entries will be out of order and will be down at the bottom. So we can't forget about those. But so if we come over, and I'm doing it in Excel just so I can have the nice columns in this structure. But so the classified balance sheet is taking now your assets and your liabilities and your equity and breaking them into the different categories. So we start with our current assets, which are the most liquid. So we have cash, and that's 13,800. And then maybe what I'll do is get rid of those decimal, or get rid of the extra decimal points. Okay, then our accounts receivable is 28,300. And then our prepaid insurance is 2,400. Then let's just go down and make sure, but down here at the bottom we have interest payable, interest expense, insurance expense, so nothing that impacts our current assets. So we're good there. So then now we can total those over, and then it will go into, oops, that was not what I wanted to do. All right, close it out. We'll add a little sum here, and we'll sum these up. So this will be a little lesson on Excel for you too. Okay, so then I'm going to get rid of my extra decimal places also. So those are my total current assets. And again, like I always think of this column as kind of like my subtotal column. So all the detail accounts go there, but then you pull the total over into the next column. Okay, then we come down to our property, plant, and equipment. So we have land at 67,000. We have buildings at 127,000. And then we have equipment at 59,000. Now the thing that there is in here, and I'm going to add it right below. So I'm going to insert a row here, and then I'm going to insert a row here. So because if we go down below, we can see in our adjusting entries, we recorded depreciation expense. So we have accumulated depreciation buildings, 3,000, accumulated depreciation equipment, 3,600. Okay. And then these will be negatives. You know, they're credits, so they're what we call contra assets, contra accounts. So they go the opposite direction. So it's a negative. And then the equipment is a negative 3,600. And then that should be our total assets, not our total assets, but our total property, plant, and equipment. So then I will sum those. So again, here I'll click that auto sum. And then I'll select that range of cells. Okay. And now I should be able to total my assets. We should have everything that we need in there. So again, I'll go up and click my auto sum and select that range. Okay, so that's my total assets. Then we come to our current liabilities. So we have accounts payable. And that total is 12,500. Then we have unearned rent revenue. That total is 1,500 if I look over at the adjusted column. Okay, then we have a notes payable at 120,000. And then I need to add a line because then down here we have an interest payable at 10,000. Then that should be it though, because then we've already dealt with our accumulated depreciation and the rest look like expenses. Okay, so then if we come over here, now I'll again go up and use my auto sum and I'll subtotal those. And those are my current liabilities. My long-term liabilities are, oh, I guess I don't know that. Notes payable could be long-term, huh? Based on where it's located, I think it is. Okay, so I'm actually going to cut this out. Sometimes notes can be short-term as well. And so it's nice if they give us a little bit more information. Whoops. But in this case, they did not. So I'll just. Okay. So then that will be our total long-term liabilities is just that total because there's no other ones. So again, I could just type it in, but I'll add that sum just to carry it over. Okay, then our stockholders' equity section, we are going to have our common stock. And the common stock is back up, 90,000. And then we have our retained earnings. And I started to map it out over here, but let me double check. Because we have our revenues less our expenses. So these two items are our revenues, which I added together. Then I added all of the expenses. So I want to make sure, though, that I got those bottom two, the interest expense and the depreciation expense. Okay, yes, but I did. So then I took my total revenues less my total expenses. That provided me with net income. And then I reduced it by the dividends. So they paid out dividends of 22,000. So that would have come out of the net income. So then 44,000 should come over to our retained earnings. So let's see if that. All right, let me just double check real quick though, because I think I'm missing that $42,000 over here. Oh, because I deleted that line. Yeah, so 42,000 of this first expense got deleted inadvertently. Okay, so then now that changes my numbers. Okay. So now 56,900 is what I'm expecting the retained earnings to be. So then now if I sum those, so then now my total liabilities and stockholders' equity would be these three items added together. No. And then you want to always double check, so that does it. So the stockholders' equity and liabilities equal our total assets. So then our balance sheet balances, and then that is a classified balance sheet. And again, what I did over here on the side was just trying to figure out what happened to retained earnings. So I took my revenues, less my expenses, less the dividends, and that was the increase to retained earnings that you see in this T account.